Hi everyone, and thanks for clicking this video and welcome back to the Self-Learning Corner. And if you people are new or here, then welcome to my YouTube channel. In this video, we are going to discuss about the previous year MCQs of UGC NET COMMERCE exam. In this session, I have taken business economics PYQs mainly. So let's begin this session. First question. Normally demand curve slopes upward, downward, horizontal axis, vertical axis. And we know that normally demand curve slopes downward. And the next question. Which of the following refers to perfect competition? There are restrictions on buyers and sellers. Actually, this is wrong because there is no restriction because a large number of buyers and sellers are there exist. And there are no restrictions on movement of goods. This is absolutely right because there is no restriction on movement of goods. There is perfect mobility of factors of production. Freedom of entry, we know that there is a lot of freedom of entry and exit of firms. There are no restrictions on factors of production. So the 2 and 3 features are right. So here the answer is option number B, that is 2 and 3. Assertion and reasoning. Assertion means total utility will be maximum when the marginal utility of respective products are equal. Actually, this is exactly correct. Total utility will be maximum when the marginal utility to price mu by T is equal to mu by P of respective products are equal. And the reason says that deviation from this situation leads to reduction in the maximum utility. And this is also right. So here the correct answer is option number C, that is A and R are correct. And the fourth question, match the following. And in this question, they are given list 1 includes survival, ROI, growth, innovation, and etc. And list 2 includes economic objective, natural urge, business purpose, and primary objectives. So survival is a kind of natural urge, and return on investment is a business purpose actually. And growth is a primary objective of every firm, and this economic objective, innovation, is the economic objective. So here the answer is option number A, that is 2, 3, 4 and 1. And the fifth question, consider the oligopoly model, Sweezy's Kinked demand curve model, Newman and Morgenstern game theory model, Cornell's duopoly model, Baumol's sales maximization model, and arrange them in the correct sequence as per the order of evolution. Actually, Sweezy's Kinked demand curve model in the year of 1939 actually, 1939. And Newman and Morgenstern game theory model in 1944. And Cornell's duopoly model in the year 1938 actually, and Baumol sales maximization model in the year 1967. So we can arrange them in the correct sequence, that is Cornell's duopoly model and Sweezy's Kinked demand curve model and Newman and Morgenstern game theory model and Baumol sales maximization model. So here the answer is option number C, that is 3, 1, 2 and 4. And the next question, demand has the following elements: quantity, price, time and all of the above. Actually, the elements of demand includes quantity, price, time, willingness, ability, etc. So the next question, a perfectly competitive firm attains equilibrium when AC is equal to AR, MR is equal to MG, MC is equal to AZ, TZ is equal to TR. And here a perfect competitive firm attains equilibrium when MC is equal to MR and MC equals to MR from below. And the next question, assertion. Business economics is a tool for facilitating decision making in business, and it provides, reason says that it provides an analytical understanding of economic activities. So they say that business economics is a tool for decision making actually. It's a tool for decision making, and reasoning says that business economics provides an analytical understanding of economic activities. Both these statements are correct. So here the answer is option number B. And the next series of questions I have taken 2012 December exam. So then the ninth question, which kind of economics explains the phenomena of cause and effect relationship? Normative, positive, microeconomics and macroeconomics. And here the answer is positive economics. Actually, positive economics is an approach to economics and which deals with mainly what it is. That means it is not concerned with moral questions or ethical questions like that. It describes the facts of an economy. It explains the phenomena of cause and effect relationship. It is mainly descriptive in nature and it does not involve any value judgment or like that thing. And normative economics says that it is mainly it deals with what ought to be, which means it which make value judgments. It tells what is right, what is wrong. Actually, it is prescriptive in nature. And microeconomics, which is related to things related to a firm, and macroeconomics, which things related to an industry. And in this question, they have asked about the economics which explain the phenomena of cause and effect relationship, and here the answer is positive economics. And the next question, in perfect competition, the demand curve of a firm is vertical, horizontal, positively sloped, and negatively sloped. And we know that in perfect competition, the demand curve of a firm is horizontal representation. And the next question, assertion and reasoning. Marginal cost and differential cost do not convey the same meaning in all the circumstances. And reasons is that differential cost increases or decreases due to change in its fixed cost. Marginal cost means that it is an additional cost for using an additional unit. And differential cost means that it is mainly change in differential cost, or change in this type of cost mainly arises due to change in level of activity or change in the method of production or change in the pattern of production, etc. So marginal cost and differential cost do not convey the same meaning, and this is exactly correct actually. And the differential cost increases or decreases due to change in fixed cost. This is absolutely wrong, because differential cost arises mainly change in patterns or methods of production and change in level of activity, etc. So the option number C is the correct answer. That is, A is true but R is false. And the next question, arrange them in the correct sequence: pricing objectives, pricing methods, pricing strategies, pricing decisions. So the first one is pricing objectives, and next one is pricing strategies, and the third one is pricing methods, and the fourth one is pricing decisions. And next question, a commodity is used for multiple purpose and then the demand for it is known as joint demand, composite demand, direct demand, and autonomous demand. And here the answer is composite demand. Composite demand means a commodity which is used for multiple purpose. For example, we can take milk. We can convert milk into curd, or like that way we can use it. Or for we can say example, electricity. And electricity we can use for lighting purpose, heating, like that way. So washing machine on everything. And joint demand means two or more goods are needed to satisfy a single want. And direct demand means for finished goods. And the next question, Kinked demand curve is related with monopoly, discriminating monopoly, oligopoly, and perfect competition. And Kinked demand curve is mainly related with oligopoly, and which is given by the Paul M. Sweezy. And the next question, if the price of any commodity decreases by 20% and the demand for that commodity increases by 40%, then the elasticity of demand would be perfectly elastic, perfectly inelastic, unit elastic, and highly elastic. There is a change in price results in more than proportionate change in quantity demanded, then it is called relatively elastic demand, highly elastic. So in this question, the answer is highly elastic. And next question, which of the following statements is true? In case of inferior goods, the income effect is negative, and although the substitution effect is positive. Actually, it is correct, because inferior goods means that it is an exception to the law of demand. In the case of inferior goods, people will buy less quantities of commodity at lower price and more quantity of commodity at higher price. In case of inferior goods, the income effect is negative. This is actually absolutely right, and although the substitution effect is positive, this is also right. So here the answer is this. If you have enjoyed this video and if you need more videos like this, then click on the like and subscribe buttons, and thank you for watching this video.